So today I'm going to be talking about multiple time frame analysis using the market structure. So I'm going to be showing you guys how to understand market structure from a multiple time frame perspective. You get. So as I said, the market structure is more like that is like the building block, the foundation of this market. If you want to understand the market, you have to understand the market structure. If you understand market structure, it will be easy for you to be able to navigate this market. It's more like the blueprint for the market. If you can understand market structure, you will be able to predict where price will be heading. So before we go into the advanced part of this session, I want you guys to understand that the market is fractal. When I say fractal, it means what you see on the higher time frame, such as the weekly, the monthly time frame, the daily time frame. They are also seen in the lower time frame, like the 5 minutes, the 2 minutes, the 1 minute, even the seconds chart. You see them. So basically, the market is more like is all related. So the things you see on the higher time frame are the same things you see on the lower time frame. So now let me give you guys an example. Now we said there are three market structures. Let me make an example with the bullish market structure. This is an example of a bullish market structure. That is a market that is creating higher highs and it is creating lower lows. Okay, so this is a bullish market structure. Now, do you know that in this move here, if you remember, I said we call this a trading range between here and here. We call it a trading range. That is between here and here is a trading range. So anytime this trading range breaks, that's what we call a break of structure, right? The point I'm trying to make is inside this range like this here, you have multiple bullish, mini bullish market structure inside something like this. We have something like this inside this movement here. I don't know whether you guys understand. So inside a move like this, let's assume this is a daily time frame. Let's assume this is a daily time frame. Here is a daily time frame. And the big picture on the daily time frame is you are seeing a market that is clearly bullish. So here, what you're going to see if you go to the lower time frame, such as the 1 hour, is you're going to see you're going to see a bullish market structure, a mini bullish market structure here. So between here and here, what you tend to see is a bearish market structure. So between here and here, because the market is moving upwards, you tend to see a bullish market structure like this, but it has to be on the lower time frame. And between here and here, you will tend to see a mini bearish market structure. That is a market that is forming lower highs and lower lows. You will see it in this move here. So that's what I'm talking about when it comes to the market being fractal. So the things you see on the higher time frame are the same things you're going to see on the lower time frame. And if you understand this market from this perspective, you'll be able to navigate it easily. So that's why sometimes on the higher time frame, you might be bullish. Meanwhile, on the lower time frame, you are bearish. But the overall market structure is bullish. But maybe at that particular time, the market is in a pullback. The market is trying to pull back. So now let me give you guys a live chart example of what I just illustrated. This is a daily time frame. This is GBP USD. If you look at this structure here, you will agree with me that this is a bullish market structure. That is a structure that is forming higher highs, higher low, higher high, higher low, higher high, higher low. This to tell you that generally this market is bullish. But if you look at the market, you won't really see clear structure. This is a daily time frame. So what I want to show you now is I want to show you guys the mini structure inside this bullish market structure now. So now let me draw the bullish market structure here so that you guys will understand it. This is a clear bullish market structure. So now what I want to do is I want to go down into the lower time frame and show you the mini structures that are inside this bullish market structure, because this is the only way you can understand the market, and this is the only way you can predict what the market is going to do. I don't know whether you understand. So I'm going to go a time frame lower, but before I do that, let me just highlight the whole of this. Let's look at the price action inside this up movement here. Let's see what price is doing. So now let's go down to a 4 hour time frame. Let's go down to 4H time frame. This is the up movement I just explained. Now, if you look at this, you can clearly see the market forming higher highs, higher low, higher high, higher low. This to tell you that you have many structures in the overall structure. The overall structure is bullish. So this movement here is clearly showing you that yes, the market is bullish. So this is the daily time frame structure that I outlined. But currently we are on the lower time frame. We're on the lower time frame, trying to look at the mini structures that we can find. So earlier I said there are situations where the market could be bullish, that is, a market is making higher highs and higher lows, or let's just say a market that is moving upwards. But the market structure is going to be bearish. That is the mini structures inside. Now look at the structure here. Look at this particular structure here. So market was forming higher highs and lower highs and higher highs. So all of a sudden, we had a shift of market structure. In the previous video, I discussed shift of market structure. So if you don't really understand what I'm talking about, maybe you should check the previous video. So this is a shift of market structure here. Shift of market structure, meaning a structure that is changing direction. Initially, market was forming higher highs and higher lows, and then all of a sudden, we had a shift, meaning market changed direction. I don't know if you guys can see this. Changing direction to show that it is now bearish. But mind you, on the higher time frame, the overall structure is bullish, meaning the overall market is aimed at moving price higher. So when you look at this, you see the market then all of a sudden created or shifted structure here. That's to tell you that the market is now ready to start moving higher. Now, the whole idea or the reason why I'm showing you this is so that you will have an understanding that when the market is buying, you should be more concerned about or trying to get entries that will buy. Because someone will look at this and say, oh no, it's time to start selling, and then they will sell, and before they know it, the market will take them out. And back to the daily time frame. So this is the whole idea. On the higher time frame, what we are looking at is a bullish market structure. But if you look at this move here, the market turned bearish here. So in situations like this, what you want to do is you wait for this market to become bullish again. So you won't want to be buying in this situation. I want to talk about the internal range liquidities and the external range liquidity. During the previous session, I spoke about how price moves. Price normally moves from internal range liquidity, that is, in a bullish market structure like this, we outlined that this is our trading range. And anything, this range here, this is a trading range. So anytime price moves above this, it means that it has taken out external range liquidity, or it has broken structure to the upside here. So after breaking this structure here, what you have here is a new structure. So now when it happens like this, what you expect price to do is price will definitely have to do a pullback. Anytime price goes in the opposite direction that you're expecting it to go, they call that move a pullback. So you expect price to do a pullback before it will move again and take out this range. So now, what is actually pushing price? What is making price reverse from this place? Why did price not go lower than this? The reason why price reverse from this area here is because of what we call the internal range liquidity. So liquidity that is within the range, within this trading range, between this range and this range, we call them internal range liquidity. Though I won't really go so much into internal range liquidity and external range liquidity. That's going to be for the next session. But I want you guys to know that there's a reason why price is reversing from here, and there's a reason why price is reversing from here. And also there's a reason why price is reversing from here. So the reason why price is reversing from here is because of what we call the internal range liquidity. So price moves from, let me write it, the nature of how price moves. How price moves. Number one, price moves from external range to internal range, and then it moves from internal range to external range. This is the only way price moves. You see, I told you guys we are supposed to only trade market that is showing a clear direction, that is making either higher highs or higher lows, or is making lower lows and lower highs. Anytime you see a market that is ranging, if you see a market that is making this kind of sideways movement, we call it a ranging market. And in situations like this, you would not want to trade this kind of market because you are not sure where this market wants to head. So if you say you want to maybe buy here, you don't know when it's time for you to sell. Or maybe if you start selling here, the market might take you out here. So in situations like this, you just want to avoid trading this kind of market. So we call this the ranging market. So we're avoiding this kind of market. So we're only focused on the bullish market structures and the bearish market structures. So let me still go ahead. Let me still go over it. This, we call it external range liquidity, or this is our trading range. The reason why price reversed from here to go higher is because there is something there is something here that is pushing it. Tomorrow I'll break it down and show you guys what exactly is making price to reverse from here to go higher. Okay. So, but today I just want you guys to have an understanding that inside a market structure like this on the higher time frame, you still have many structures inside. So that is where the whole idea of or having the understanding of shift of market structure comes in. Because if you have an understanding of shift of market structure, whenever you spot it on the lower time frame, you know that it's not as if the price is completely changing direction. It is only doing a temporal move, and you'll be able to know when it is ready to go back in line with the direction. That is the whole idea of having the understanding of shift of market structure, or some people call it change of character.